Let's move on to another company that's been hit pretty hard because they're in the software industry. Is Salesforce, symbol CRM, about only 2.1% short on the float side. So somebody really missed the short on that a few months ago. 84% institutional owned. PE ratio 27, which is high, but still better than the industry, which is not material. Price of sales 4.8 versus 4.6. That's okay. Price of book value does look good, 3.2 versus 5. Price of cash flow also looks good, 14.4 versus 21.3. PEG ratio looking very good, 0.9 versus 3.5. Now, we do see the earnings over the last year for Salesforce did climb by 17.8% when the industry was down 2.6%. Sales did increase by 6.4%, industry up 6.2%. 5-year growth rate from the analysts on Salesforce on the earnings is 17.2%, just above the industry at 16.8%. Now, they do pay a dividend of 0.9%, using about 22% of their earnings to pay that out. Looking at the balance sheet for Salesforce, they have a current ratio of 1, half the industry at 2, so I'd like to see it a little bit higher. But the debt to equity, they don't have much debt. It's 0.2 versus 0.5. They will point out here, I'll point out here, they have high intangible assets of 59% versus 34%. Danger with those is that things don't go the right way. Those could be written down, which is not a good thing. We do see a net profit margin 17.9 versus 10 for the industry, so that's a positive. Return on equity is 12 versus 17, which that was higher. We do see free cash flow. This is something very good for Salesforce. $12.9 billion versus $4 billion for the industry. So they're very good at generating cash flow, which is a big positive.
Yeah, looking at the current price here for Salesforce, again, their ticker symbol CRM, $202.11. 52-week range. The low here, $174.57. We've seen a little bit of rally off the bottom there, and the high, $296.05. Over the last year, it is still down about 29%. Year-to-date, still down about 23%. I mean, it does look somewhat intriguing, though. You go out to January 2028 now. Estimated earnings per share, $14.91. Gives you a target sell price of $247.51. Forward PE right around 13.5 times. Couple concerns I do have with the stock. I mean, you're finally finding decent valuations in these software companies, but the big thing I look at is, if we do have a slowing increase in the workforce or maybe a declining workforce, like we said, these companies generally make money off what we'll call the seats or the number of users. Right. Well, if there's less users out there, that means they're going to have to raise prices elsewhere to offset less users. The other big problem that I have with these software companies is stock-based compensation. And this is just a ChatGPT, so don't hold me to it in full. As we know, it's not always completely accurate. But
what? I thought ChatGPT was 100% accurate.
I'm going to roll with these numbers because I have seen this a couple of times. Stock-based compensation in fiscal year 2025 for Salesforce, $3.18 billion. Well, number means nothing else. If someone compare it to, of course. Net income, $6.2 billion. I do believe Salesforce backs out stock-based compensation from their earnings reports. So, I mean, stock-based compensation is over 50% of that. And the reason that's a problem is if the stock remains depressed for an elongated period of time, people don't want $3 billion worth of a useless stock. They're going to want the cash. And that then goes from a expense that's not reported to an expense that has to be reported. Right. And, again, we talk about Warren Buffett a lot today. He said stock-based compensation has a key word in it, compensation.
Yeah, and it is compensation. And again, with the stock down as much as it is, people might be saying, I don't want that compensation, as you said. I want true dollars that I can work with.
And if the stock bounces back, they're probably fine. But if it doesn't, a year from now, 2 years from now, if it remains depressed, I think you could see earnings compression here because they're going to have to start paying people.
And I'm not sure what would cause it to bounce back. I mean, it's not a terrible buy when you look at the numbers, but when you point out these hitting things in accounting that people don't see, and I always like to see a company do well. Yeah. But on the other hand, too, you've got to understand when you invest what's going on behind the scenes, because I'd rather not invest. And let's tell people. I mean, we're actually looking at buying Salesforce, and I think it was around 180 or something. And then you discovered about the stock-based compensation, saying, "Gosh, that's kind of risky." I mean, we could really end up not being happy with that. So we elected not to do it. has come up a little bit from them. But I mean, the 174 I think was just last week, and I don't know if it's over for the software companies yet.
I don't think so. I mean, I think there's still a lot of potential for them to capitalize off AI. There's going to be winners, but there'll also be losers.
Over as far as their stock going.
Oh, I see what you're saying. Yeah, I mean, you have to remember during the tech bust, things fell, then they bounced back 20-30%, and then they crashed again. Could that occur with this? Maybe.
Yeah, maybe it could happen. Well, there's a closing bell.